Hello students, welcome to today's lecture series on ACT 216 Principle of Business Administration 2, Study Section 5. The title of today's topic is Financial Market and the Market Exchange. Introduction. The term market means the aggregate of possible buyers and sellers of a certain goods or service and the transaction between them. Hence, financial markets is sometimes used for what are more strictly exchanges, organizations that facilitate the trade in financial security, for example, a stock exchange or commodity exchange. These study sections will talk more about financial market and stock exchange. Outline of study section 5. When you have studied this section, you should be able to discuss financial markets, define and explain stock exchange. Financial market. A financial market is a market in which people and entities can trade financial securities, commodities, and other tangible items of values at low transaction cost and at prices that reflect supply and demand. Within the financial sector, the term financial market is often used to refer just to the markets that are used to raise finance. Securities include stocks and bonds, and commodities include precious metals and agricultural goods. Type of financial market. The following are the types of financial markets worldwide: stock markets, foreign exchange markets, bond markets, insurance markets, future markets, money market, derivative market. However, financial markets can be divided into capital markets and money markets. So also, capital markets can be divided into stock markets and bond markets. Stock market can be subdivided into primary market and secondary market. Stock market is a market that provides financing through the issuance of shares or common stocks and enable the subsequent trading thereof. Bond market is a market that provides financing through the issuance of bonds and enable the subsequent trading thereof. Commodity market. Commodity markets are markets which facilitate trading of commodities. Money market are markets which provide short-term debt financing and investments. Derivative markets are markets which provide instruments for the management of financial risk, while future markets are markets which provide standardized forward contracts for trading products at some future date. Insurance markets. Insurance markets are markets that facilitate the redistribution of various risks, while foreign exchange markets are markets that facilitate the trading of foreign exchange. We also have primary markets. These are markets where newly formed securities are bought or sold in primary markets, such as the initial public offering. The transaction in primary market exists between issuer and investors. Secondary market. Secondary markets are markets which allows investors to buy and sell existing securities, while secondary market transactions among investors. Liquidity. Liquidity is a crucial aspect of security that are traded in secondary market. Securities with an active secondary market means that there are many buyers and sellers at a given point in time. Liquidity refers to the ease with which a security can be sold without loss of value. Roles of financial system in the economy. One of the important sustainability requisites for the accelerated development of an economy is the existence of a dynamic financial market. The financial market helps the economy in the following manner: 1. Saving mobilization. 2. Investment. 3. National growth. 4. Entrepreneurship growth. 5. Industrial development. Explaining these roles one after the other, starting with the saving mobilization Saving mobilization, obtaining funds from the savers or surplus units such as household individuals, business firms, public sector units, central government, state government, etc. is an important role played by financial markets. Another role is the roles of investment. Financial markets play a crucial role in arranging to invest funds thus collected in those units which are in need of the same. Then we have national growth. An important role played by financial markets is that they contribute to the nation's growth by ensuring unfettered flow of surplus funds to deficit units. Flow of funds for productive purposes is also made possible. Next is the entrepreneurship growth. Financial markets contribute to the development of the entrepreneurial club by making available the necessary financial resources. And lastly, we have industrial development. The different components of financial market help an accelerated growth of industrial and economic development of a country, thus contributing to raising the standard of living and the society of well-being. Functions of financial markets. The functions of financial markets can be categorized into intermediary function and financial functions. The intermediary functions of financial markets includes the following: transfer of resources. Financial markets facilitate the transfer of real economic resources from lenders to ultimate borrowers. Second intermediary function of financial market is enhancement of income. Financial market allows lenders to earn interest or dividend on their surplus invisible funds, thus contributing to the enhancement of the individual and the national income. Productive usage. Financial markets allow for the productive use of the funds borrowed, enhancing the income and growth national production. Another intermediary function of a financial market is the capital formation. Financial markets provide a channel through which new savings flow to aid capital formation of a country. Then the financial function of a financial market includes the following: providing the borrowers with funds so as to enable them to carry out their investment plan, providing the lenders with earning assets so as to enable them to earn wealth by deploying the assets in production debentures, providing liquidity in the market so as to facilitate trading of funds, and lastly, providing liquidity to commercial banks. Stock exchange. A stock exchange is a form of exchange which provides services for stockbrokers and traders to buy or sell stocks, bonds, and other securities. Securities traded on a stock exchange include stock issued by listed companies, unit trusts, derivatives, pooled investment products, and bonds. Stock exchange also provide facilities for issue and redemption of securities and other financial instruments and capital events, including the payment of income and dividends. Stock exchanges often function as continuous auction markets, with buyers and sellers consummating transactions at a central location, such as the floor of the exchange. Roles of stock exchange. Stock exchanges have multiple roles in the economy. This may include the following: raising capital for businesses, common forms of capital raising. Raising capital for businesses. A stock exchange provides companies with the facility to raise capital for expansion through selling shares to the investing public. And also, common forms of capital raising. Besides the borrowing capacity provided to an individual or firm by the banking system in the form of credit or a loan, there are 4 common forms of capital raising used by companies and entrepreneurs. Most of these available options might be achieved directly or indirectly through stock exchange. The Nigerian Stock Exchange. The Nigerian Stock Exchange was founded in 1960 as the Lagos Stock Exchange. It started operations in Lagos in 1961 with 19 securities listed for trading. In December 1977, it became known as the Nigerian Stock Exchange, with branches established in some of the major commercial cities in the country. As of December 31st, 2013, it has about 200 listed companies with a total market capitalization of about 12.88 trillion naira. Regulation of Nigerian Stock Exchange. The Nigerian Stock Exchange is regulated by the Securities and Exchange Commission, which has the mandate of surveillance over the exchange to forestall breaches of market rules and to deter and detect unfair manipulations and trading practices. Data on listed companies' performance are published daily, weekly, monthly, quarterly, and annually. Transactions on the exchange are regulated by the Nigerian Stock Exchange as a self-regulatory organization (SRO) and the Securities Exchange Commission (SEC), the apex regulator, which administers the Investment and Security Act of 2007. Thank you for listening. Hope to see you in the next class.